Everybody, hope we're all doing well. Welcome back to another Sunday Sessions video. If you're new to the channel and you're not quite sure what these videos are, it's pretty much where me and Luke walk you through the markets we are looking for and looking to trade in this coming trading week. So the ones that we will showcase are the ones that we believe are going to provide us with some of the best trading opportunities in this week, and the ones that we will be updating and watching the closest. So I'm starting off here on the Australian dollar to the US dollar. Now I'm starting on a higher time frame just so I can give you a slight story of what it is I'm looking at and why I am looking for it. So we see that on a higher time frame, looking within this structure, which sort of represents about monthly structure, we had an impulse down, which came to break the previous low. We then had a correctional wave back up, which has come to tap into the overall buy to sell region at the top, which we have not refined. We could definitely go through there, try to pinpoint that down to an exact position, but I have just left it as the overall unrefined zone because I'm not too fussed. I just understand that price has tapped into a region of buy to sell. Where that is on the lower time frames and trying to pinpoint that is no longer relevant because the move has already happened. So we see we then had an initial move down, an initial leg of bearishness. We then came to liquidate some of that bearishness with the purpose of mitigating the position up here. We've then gone lower, and then we see that in the market, the only position that remains mitigated above price is this one right here. This is the only option if price was to start invalidating structure. The only option we would assume is that price is coming back up to tap into this zone at this level of 0.73324. So longer term, if we start seeing prolonged bullishness, it's very likely that we are coming to liquidate some of the highs, manipulate people at the market, whilst also coming to remove this unmitigated order from the market that lays here higher up, contributing to the supply and demand balance, which is actively going against what the institutions want to do. So let's actually now go lower, working within the most recent bearish impulse identified on the 1 day time frame. We have a pretty clear buy to sell region here, which I believe is the only region that I'd like to see price come and tap into if we are going to reverse and continue daily structure lower. Now, of course, in order for us to trade up to this 1 day supply zone, which we are expecting the tap of, we need to see some bullishness trade us up there. So we have then gone to a time frame lower. So this is structure identified on the 4 hour. And we can see inside of here the most recent bullish leg and then two demand zones, which ideally we'd like to see price trade into, mitigate the mitigation, introducing enough demand again to cause the next move higher, which would hopefully then trade us into this supply zone higher, the 1 day supply zone, which we want to see the mitigation of the reversal lower to continue our higher time frame bias. So the reason why we have done this and identified these demand zones is because we know that on the lower time frame here, we have broken structure lower, which means the deliverance of a correctional wave. We see after the break of structure, we are seeing some form of reaction to supply zones. This is something I was looking at the end of the trading week in the last week, where we see that price was trading up towards this nice supply zone in here. We didn't quite get the tap, but we did then get a break of structure lower, and then identified a further zone of quite a clear buy to sell, where we then traded back into, tapped it, delivered another break of structure lower, and then we see on the even lower time frames, after delivering that break of structure, we then had a pullback, if I can zoom in on that, into a clear zone here. We could argue that this zone's already been mitigated. It is a very refined region in the market, which I think I will get rid of now, knowing we've had the tap of this. Okay, so now we've had the tap of this, there's no reason really for price to trade back up higher. Therefore, my expectation is that we could potentially react to this zone here, finding enough supply to cause the reversal lower, and then seeing price slowly trade us down to this demand zone or the zone lower. If, however, on the off chance we see a emerging bullishness as the markets open in this coming week, we could then see price trailing all the way back up into this region where we have a nice buy to sell remaining over right there, which we may see the mitigation of if price ends up going slightly bullish when the market's open. You know, maybe we have some news that causes a spike in bullish higher. Okay, well, if it's going bullish, the institutions may as well come to tap the supply zone, mitigate the order that is left over there before then making that move lower. So can now move this alert to here. I also want to move my alert down to here so I know when that low is broken, which gives me confirmation that price is resuming bearishness. So that is Australian dollar to US dollar. Now let's go Euro USD. Okay, so we've been pretty ranged in this past trading week. Not many opportunities to be delivered. You'll see very, very similar bias on this market to what we've just seen on the Australian dollar US, where we've got this impulsive wave. We've got this ranging market, which we can only really assume is ranging because we're entering that period of consolidation before entering then the downtrend, which will come to mitigate one of our 4-hour demand zones. So we can see that within this ranging market, if we go to a low enough time frame now, what's happening here is that we were obviously once reacting to demand. We then come up, fail to create a new high, which is already a sign that demand is failing. As we then start to trade lower, we see reactions from supply zones. Okay, and then what we're now seeing is prices heading towards the low in the market. So if we see the liquidation of this low, it's further confirmation that we are remaining bearish because yes, we've had this move down, failure to create a higher high, a bearish impulse, a move higher which has failed to break the previous high, and then a move lower which seems to be targeting the previous low. So that is obviously emerging bearish structure. It's telling us that within this period of consolidation, supply is coming out in control, which would go hand in hand with what we'd like to see, given that we are seeing this as a distribution where we are absorbing demand and slowly introducing supply to slowly tilt that supply and demand balance into supply's favor. So we slowly want to see supply taking over, and then eventually, once supply is in full control, we're likely to see a high volume move lower to tap into one of these zones. Therefore, arguably, the best thing we can do is start looking for sell entries now to be involved in that move and be involved before the volume comes so we can profit when that happens. So let's look inside of here. Let's identify a few supply zones that remain over from this move, and we can move those alerts to the relevant regions. That definitely looks nice to me. Anywhere inside of here, yeah, well, I would argue we have a nice, if it lets me move that alert, buy to sell right there. So we have two zones, each of which represent unmitigated supply zones. It'd be nice to see price pull back into those, gain a reaction, gain a potential entry point on the sell side. So then, if we do see the reversal lower and we have more supply introduced, that's hopefully going to be the high volume move required to then take price low enough to then tap these demand zones, which then works in my overall bias. After having that one-day invalidation, creation of bullishness, we're going to tap one of those zones before going higher, targeting these supply zones that are marked 1M in the market. So now let's head on over to the pound yen. So on the 4-hour here, we've got a bullish move, a bullish impulse, which is targeting a supply zone higher. We actually zoom out, we can see what that is. Looking inside of this structure, we have a 1 month bearish impulse, correction wave, tap into a supply zone, a move lower. Now if price wants to remain bearishness longer term, we'd have to see a tap into this zone, reaction, and then a new move lower. If not, and we see the invalidation of this zone, it's then a sign that the market's going bullish longer term, which may be for the purpose of coming to mitigate orders higher on the monthly time frame. But obviously that is a long, long time away. So let's not concern ourselves too much about that. Regardless, we see inside of here, we've had that bullish impulse, correction wave delivered, which has come to trade us down into a very clear one-day demand zone. After we seen the tap into that zone, we then saw the break of structure higher, continual reactions from demand zones. There are a few that we have left over, those representing these two boxes here, 1 and 2. So what we can hope to see now is price pulling back. We see that we've had that impulse higher coming to clear the liquidity in this region. We're then seeing price sort of ranging in this region, potentially sign of a distribution. Hopefully that will cause a move lower, which will come to mitigate either this zone or the zone lower before introducing enough demand to make that next move higher, where we can then look to profit from buy positions. The one thing I'm not too keen on with this movement is the fact that once we've had that mitigation, yes, we've been having continual reactions from demand. However, we do not seem to have a whole load of volume and volatility to the upside. Now, typically, if we're going to mitigate a large order in the market, especially demand zone in this case, what we want to see is, okay, We've tapped the demand zone, which is the removal of a sell position, so removing supply, and then also the opening of buy positions by the institution. So obviously that should be tilting the supply and demand balance quite heavily into demand's favor, in which case we'd like to see high volume pushing out to showcase the fact that demand is in full control. Now we did see that, we did have a ranging market, a nice high volume push out, but then we see sort of after this point, we almost became quite range bound, very low volume, very low volatility. What I would like to see after these reactions or potential reactions from these zones is that volume and volatility introduced, because that will give me more confidence in this move playing out. Now, the fact that there isn't much demand here is saying to me, right, well, this move could easily be exhausted very quickly, in which case we realize there's not enough demand in the market to cause the move higher, because if we're running out of steam already, that is a bad sign, because we have to gain or push price all the way to and past this market high to continue bullish structure. Now, in order for us to do that, we would not want to be seeming like we are running out of demand already. So instead, I'm going to be quite cautious. If I do get involved in buy position from these zones, I will manage that position very, very effectively, because I am also making the early assumption that yes, price could still react from one of these zones and get that volume needed to go higher. However, because of the fact that we're seeing the market sort of curve off already, it could very easily need to come further lower, mitigate further orders to introduce even more demand, hopefully this time enough demand to then cause that move higher. So that is pretty much my outlook on the markets this coming trading week. Listed 3 major markets that I'll be watching. I'll be updating these as the week goes on, so make sure you are involved in the Learning Lounge and the VIP chats if you're interested to keep up with this analysis and to actually see the showcase of how I will be looking to tackle this. So now I'm going to pass you over to Luke, who's going to do the same thing, walk you through a few markets. So thank you for watching my segment, and I'll pass you over now.
How are we getting on, people? I hope you're all okay. I hope you've enjoyed James's analysis there. He's gone over some brilliant points, some brilliant markets, and it'll be very interesting to see how they play out for him this coming week. What we're going to do now is run through some of the markets that I am looking at trading this coming week, give you my rundowns, my bias, and just some of the analysis that I've got prepared for this trading week. I'm also going to highlight and show you some specific zones and areas that we can look to potentially buy and sell from. So be sure to implement them to your own markets and your own charts. That way you'll be able to profit with the LAGFX team. So as you can see on screen, we have the AUD USD market. I've highlighted 2 potential buy zones. These hold volatility because they are last sell to buy regions. So they are both holding plenty of demand in the market. Now, upon price falling into these regions, we should see a lot of demand being put in, which should essentially reverse the direction of the market, trading us higher into our higher time frame points of interest. So what I've done here is I've drawn out a path on my prediction and how I feel price will play out. I feel that price may tap into this area, provide us with some temporary bullishness where we can look to get in on some temporary buys, and then we can look to partial, move SL to entry and see how price plays out. If price doesn't take profit, price may continue to move lower, continue in this lower time frame corrective wave, trailing us into this second potential buy zone. Now, why is this a corrective wave? This is a corrective wave because we are within a higher time frame corrective wave. So this is a bullish higher time frame corrective wave. So bearish fractal moves are obviously corrective because bullish ones are the impulses. So these bearish moves are corrective within this higher time frame bullish corrective wave. That might be a bit tricky to understand. It might be a bit of a mind fog, but if you can get your head around it, brilliant. I feel like we may have some temporary bullishness upon a penetration of this zone, as we've had here, where we can get involved in some temporary buys. But ultimately, I feel that price will trail us down into this second potential buy zone, where that in itself will flip the entire direction of the market within this fractal timeframes and trail us into our higher time frame points of interest. Once price taps into our higher time frame points of interest, I then believe price will then go bearish longer term. So we want to be looking for those sell positions. This is a bearish market. So realistically, we want to be looking for longer term sells, as we always want to be trading with the trend. So Mark these areas out for yourself. This is on the 1 hour time frame, so mark these areas out for yourself. We've got an area here and an area here. Get them drawn out on your own charts. Wait for the right confirmation in order to execute those positions and profit with the LAGFX team. Okay, now moving over to Euro AUD. This is another market that is bearish on the higher time frames. It is providing us with bearish structure. As we can see, we had a penetration of a higher time frame point of interest. This penetration of this point of interest put in a lot of supply, which ultimately reversed the higher time frame direction of the market, giving us bearish structure. So therefore, we want to be looking for bearish positions. We want to be looking for sell positions. So what I have done is I have looked at this entire impulse here, this entire higher time frame impulse, and I have tried to find points of interest that hold validity with the potential to reverse the market and create the next impulsive wave. This is what I came up with. I managed to find a last buy to sell region here. So we have seen price tap into this and go on to create bearish structure. That is brilliant. What we need now to give us further confirmation, so we have as much probability that we are going to be profitable upon placing sells, is wait for a break of structure. So yes, we've had a structural low get created here, but I want to see price break that low, creating a new lower low. This would then suggest bearishness, as it will have created a lower high and a lower low. That is clear bearish structure. Therefore, we can look to get involved on the next corrective wave, giving us the opportunity to get in on a refined entry. So this is exactly what this path is here. We'd have a break of structure, creating a new lower low, this being a lower high to this high here. We would then look for the next lower high. Once that lower high has been created, we can then look to get involved. So what we would do is we would look within this impulsive wave that is created for any kind of point of interest that we can highlight. We'd wait for the penetration of that. As soon as we have rejection from that zone, that would then tell us that yes, this corrective wave has finished and the next impulsive wave is inbound. Therefore, we can execute those positions and hopefully profit in this market. As you can see, my take profit target would be set at this area. Again, highlight it for yourself. This is on the 30-minute time frame. So look at this higher time frame swing low here. Highlight it for yourself. This would be my take profit area. Why? Because setting a take profit here would guarantee that it can be achievable. Price could fall as low as this point and still go on to set bullish structure. Therefore, we would be safe if the supply and demand balance was in favor of demand at any point in time. Now moving over to the Great British Pound to the US dollar. Again, this is on the higher time frames a bearish market. So we want to be looking for sell positions. Again, we have seen and had a penetration of a higher time frame point of interest. Since that penetration, we have been delivered with bearish structure, lower highs and lower lows being created. We have just had a break of structure here upon price setting a new peak. Now what we want to do is look for that pullback, giving us a refined entry and then placing our sell positions. As you can see, price has consolidated within this region, and if anything, it's distributed, so it's actually prepared for price to actually start moving lower. We've had the break of structure, we just want that pullback, and then we can look to execute those sells. Again, take profit would be set just above this swing low, as this would guarantee that our take profit can be achieved on this, and it would still allow for a brilliant trade, offering some brilliant returns. So if we did get in upon a fractal BOS after this penetration, we would have a stop loss no larger than 14 to 15 pips, and then I would take profit, as you can see, 142 pips. This in itself offering us a 1 to 9 risk to reward ratio. So again, highlight these zones out for yourself. This is on the 15-minute time frame. Get them drawn out on your charts. Wait for the right confirmation in order to execute, and then get those sell positions placed. Okay, now moving over to XAU USD. As you can see, I have placed multiple positions within this market, but I have actually taken some time away, just as fundamentals took priority with this market and provided us with a lot of bullishness. A lot of demand was put into this market, which completely flipped my bias. I was looking for sell positions. So when we had a lot of Fed news and things like that, which depreciated the price of the US dollar, which ultimately increased the value of gold, we saw the markets go bullish, which, as I say, was the complete opposite to what my bias was for this market. But now that we've had confirmation that bearishness is inbound, we've had a break of structure take place here, we've seen price distribute, we can now look to get involved in sell positions longer term and ride this market down to our higher time frame take profit target. So looking at the 1 hour time frame, if you want to highlight this higher time frame target yourself, just so you know where we want price to go to, then what we're going to do is head down to the 15-minute time frame, and you'll see here that I have highlighted a last buy to sell region that has been left unmitigated. What we have noticed as of recently, just before the close, is price actually penetrating this zone. All we want now in order to actually execute is again go down on time frames, looking at the 1 and 5 minute. All we want is to see structure break down and start providing us with bearish structure. So we would look at this maybe as a protected low. Once we have a break in this low here and the creation of bearishness, we can then look to execute those sell positions as we'd be confident that the next bearish run is inbound. So yeah, as of Monday, I will be looking to sell into this market. We just need the confirmation that this fractal corrective wave has finished and the next impulsive wave is ready to take place. Okay, now I'm finally moving over to Great British Pound AUD. This is another market that I'm looking to trade this coming week. So as we can see, price has just penetrated a higher time frame point of interest. This whole last buy to sell region. This in itself has delivered us with some good volume to the downside. Price has rejected quite well. Like with Great British Pound USD, what I want to see is a break in structure within this corrective wave that took us into this point of interest. That would then tell me that this corrective wave has finished because it is now setting bearish structure and therefore giving us the confirmation that we can actually look to place those sell positions. So I'll be waiting for a break of structure here, waiting for that pullback into a supply zone, a point of interest that I have highlighted. Once price has penetrated that zone, rejected from that zone, I would then look to execute those sells. Having my take profit set at this swing low here, so mark this out for yourself. This is on the 1 hour time frame. Okay, so that is going to conclude my analysis for this week's Sunday Sessions video. I hope you guys have enjoyed. I hope it has given you guys some areas and zones to look out for to potentially sell and buy into these markets. I think it'll be very interesting to see how price plays out, and I think we've got some great opportunities to actually profit this coming week. Before I round this video up, I just wanted to run through my confirmation and how I look to actually execute positions. I know people have great struggle in actually finding ways and reasoning as to why to enter into a market. So I just want to highlight this quickly as it's quite straightforward when you understand it. So just jumping straight into it, you'll see how this market is bearish. It's providing us with lower highs and lower lows. Yeah, clear bearish structure. With every impulse, we have that corrective wave, okay? That corrective wave is brilliant as that gives us the potential to get in on the higher time frame structure. Okay, so this is giving us the ability to get into this market on sell positions because that is the overall direction of the market, is to go bearish. Now this here highlights a point of interest, a last buy to sell region, any inefficiency within the market. This holds validity for the potential that price is going to tap into it and then go on to reverse, creating its next impulsive wave. This being an impulsive wave here, we can expect the same to happen here after a correction. Okay, so when we have the penetration of a point of interest, we don't look to execute as soon as we see rejection from this zone. Now, yes, you could look fractally within this change here in structure, but that isn't giving us the ultimate confirmation we need. What we would want realistically is a break in this low to confirm that yes, this corrective wave here has finished and the next impulsive one is inbound. Why would we want a break in this low? Because if you see here, we are seeing higher highs and higher lows being created, this being a higher low. We want to see this higher low get broken, as this would then confirm that we are no longer following bullish structure, but we are actually following bearish structure. So this would then be a valid lower high. This would then be a valid lower low, and then we can look to get involved on the next lower high that's created. As you can see, this then offers us the capability of getting in on a really refined entry, because what we would do is we would look at this impulsive wave, okay, that broke this structure, yeah, this bullish structure, because this is the impulsive wave that actually breaks this bullish structure here. So we'd look at this impulsive wave for a fractal point of interest. Okay, so say that we found one here, brilliant, we found a fractal point of interest. We would wait for price to tap into this fractal point of interest. As soon as we have rejection from this zone, so we have a fractal break of structure within this corrective wave that was created on the lower time frames, that is when we look to get introduced into this market. Okay, so this is how we get really refined entries. We wait for an initial break of structure from a point of interest. We then wait for another tap of a fractal point of interest, and once we've had a break of structure from that, that is when we can look to get involved, because that is when we've got the confirmation. Then we would have our take profit set maybe at the swing low, the last swing low, higher time frame swing low that was created, just to be safe. Now, as you can see, this is offering us a 1 to 9.5 risk to reward ratio, and this is just drawing out a example here. Now, if we go back to all my analysis that I've gone through, I have done the exact same thing and implemented the exact same thing on all those other markets. And it is as simple as that. If you want further guidance and you want me to go through a proper video on how I look to actually execute positions, then by all means leave them in the comments and I'll create a video on that. But that is just going over how I actually look to execute those trades on these markets when I've done my analysis. Now, I hope you guys have enjoyed this video. If you have done, leave some feedback below, leave a like on the video. All the support you guys provide is very much appreciated, and we'll catch you guys in the next one.